All right, let's go into the Branford market report. This is going to be an in-depth look at the Branford, Connecticut real estate market for January 2026. The headlines are everywhere. Interest rates, inventory, bidding wars. It's a lot to keep track of. So today we're going to cut through all the noise, look directly at the data to understand what's really happening here in our town. We're going to unpack the key trends from overall market health to specific dynamics for single-family homes and condos. By the end of this video, you'll have a clear data-driven picture of the current landscape and the actionable advice whether you're thinking of buying, selling, investing in Branford this year. Let's get into it. All right. So this is the negotiated equilibrium, folks. What's the best way to explain this? After years of pandemic era frenzy, blind bidding wars, waived inspections, home selling for in hours, Branford market has fundamentally shifted. We've entered that analysis, what analysis are calling a negotiated equilibrium, so to speak. So what exactly does that mean? It means that hysteria is over. Buyers and sellers are now engaging in rational price discovery. Negotiations are back on the table. Due diligence is no longer a luxury. It's expected, as we should be. Here are the key indicators that tell us we're in this phase. The single-family absorption rate is sitting at 18.3, which puts us in a balanced market territory. But look at the condo market. It's at 47% absorption, which is still strong seller's market. So we're seeing two different types of dynamics playing out depending on what segment you're in. Mortgage rates, they've stabilized around 6.1%, which is a huge improvement from the 7+ we were seeing in 2024. The stability is giving both buyers and sellers confidence in the transaction without the fear of the rug being pulled out from under them. And here's a really healthy sign. 16.7% of active listings saw a price reduction in January. Now that might sound negative, but it's actually a sign of a functioning market. It means sellers who overpriced are being disciplined by buyers who know their numbers, especially nowadays, that the market is self-correcting, which is exactly what you want to see. All right, so let's understand the price data a little bit. Let's talk about the numbers you're probably seeing in the headlines because there's a lot of confusion out there about whether Branford prices are falling or rising. To be honest, the median sale price for single-family home in January 2026 was $427,000. If you compare that to December of 2025, when the median was much higher, it was about $575, it looks like the prices dropped 13% in a single month. But here's the critical thing to understand. This is not a market crash. This is what we call a composition effect. January closings reflect contracts that were signed back in November and December, historically the slowest months for the luxury homes that are usually on. The high-end waterfront properties in Pine Orchard that would normally pull the median up just weren't closing in that window. So the median naturally gravitates toward the entry level and mid-market transactions, which cluster right around $427,000 mark. In fact, when you look at the average sales price, which includes those luxury outliers, it's closer to $950,000. So the market hasn't crashed. It's just that different types of homes sell at different types of the year. Now contrast that with the condo market. Condo prices are showing true appreciation, up 4.5% year over year with a median around $299,000. We're seeing condos like the one at 295 Monticello Drive sell for $299,000, which was 3% over asking price. Another unit on Main Street sold for 9% over asking. Why is the condo market so strong? It comes down to the rent versus own calculator. Median rent in Branford is now $2,450 a month. But if you buy a $300,000 condo with 20% down at today's 6.1 rate, your monthly payment, including taxes and insurance, is right around $2,200 a month. You're actually saving money by owning, and that creates a structural floor for condo prices. This brings us to one of the most important themes of the Branford market right now, the bifurcation. The market has split into two completely different worlds based on one thing, condition, similar to Guilford. On one side, you have the turnkey properties, homes that are move-in ready, updated, well-maintained. These homes are selling for 102 to 105% of their list price. They're on the market for just 20 or 30 days. Multiple offers are still common with these properties, and buyers are willing to pay a premium because they don't want the hassle of the renovations. On the other side, you have what we're calling project properties, homes that need work, deferred maintenance, outdated kitchens, outdated bathrooms. These homes are sitting on the market for 90 days or more, and they're selling for 95 to 97% of their list price. Buyers are factoring in the cost of that and the headache of renovations, and they're negotiating hard against these properties. Why has that gap widened so much? The sweat equity. Buyer has largely disappeared with the high cost of materials and labor and the complexity of managing a renovation. Most buyers today would rather pay a premium for a home that's already done than go take on a project and save a few bucks. The strategic takeaway here is massive. Pretty much, it's much better for the sellers because you have a pre-sale preparation is no longer optional. It's the single most important factor in determining how fast your home sells for and for how much. A $450,000 home with a new kitchen and roof will sell in 3 weeks at full price. A $425,000 home that needs $50,000 in work, it's going to sit on the market for 3 months and ultimately sell for right around $400,000 after concessions. The market is aggressively penalizing deferred maintenance. Now let's zoom in on the condo market because this is really where the action is in Branford right now. And I'm just going to jump off and let you know I am seeing this firsthand. I have some clients who are looking at condos, and I absolutely cannot believe the bidding wars on these condos. I mean, these are condos that not too long ago were in the mid 200s, pushing 4 and plus. Multiple offers. It is crazy. So we're looking at just 2.5 months or 2.1 months of supply for condos compared to 5.4 months for single-family homes. There are only 17 active condo units on the market at the time of this recording, and that may be changed already. The sale-to-list ratio is 100 to 103%, meaning buyers are routinely bidding over asking price, and condos are selling in an average of 44 days, which is 11 days faster than the single-family homes. So why is the condo market so competitive? It's what the report calls the affordability funnel effect. With the median single-family home at $427,000, condos are the only viable entry point for household earning the area median income who don't have a ton of equity to transfer from a previous home, so they're going with this option. All of that demand is being funneled into the sub $350,000 bracket. It's creating fierce competition. There's also what we're calling the missing middle problem. Branford's condo inventory follows a barbell distribution. You got older entry-level units under $225,000 on one end and luxury waterfront condos over $600,000 on the other hand. But that sweet spot modern 2-bedroom townhome in the $300 to $400 range is incredibly scarce. When one of those units hits the market, it's absorbed almost instantly. And as I mentioned earlier, the rent versus own is, it's powerful. At the $2,450 a month in rent versus $2,200 a month to own, the math makes ownership incredibly attractive, And that's providing structure, support for condo prices, even in this higher interest rate environment. Okay, inventory. It's definitely becoming a crisis, and not that it hasn't been. Let's talk about the elephant in the room. It's the inventory, or more accurately, the lack thereof. We currently have 1.8 months of supply for the single-family homes. A balanced market is considered to be 4 to 6 months of supply. We are in a severe seller's market territory, not because of overwhelming demand, but because of the critical lack of supply. New listings are down 12% year over year. So what's causing this? Is the rate lock-in effect? So many homeowners refinanced into interest rates in the 2s and the 3s during the pandemic. They are now extremely reluctant to sell and give up that incredible financing only to buy a new home with a rate of in the 6s, which is usually supposed to be normal. Even though the 6.1 is better than the 7 we saw last year, it's still painful compared to the 3% mortgages that most of us have. So homeowners are staying put unless they absolutely have to move. The inventory that is coming to market right now is primarily driven by what we call must sell. They're must sell scenarios, divorce, estate settlements, job relocation that can't be deferred, and downsizing retirees. These are life stage driven sales, not discretionary moves. Looking ahead to the spring, we're anticipating 10 to 15% increase in inventory as we head into March and April. Sellers are starting to accept the 6% is the new baseline, and they're not going to wait around for the 4% rates to come back. But unless rates dip below 5.5, we're not going to see a flood of inventory. It's going to be a gradual thaw, not a dam-breaking experience. All right, let's dig into the mortgage rate environment a bit because this is the foundation of everything we're seeing in the market. The 30-year fixed has been averaging around 6.1 in January. The range was incredibly tight between 6.06 and 6.16, just 10 basis point spread. That stability is really important because it gives buyers and sellers confidence to lock in the contracts without worrying about sudden rate hikes. Now, 6.1 is obviously a huge jump from the all-time lows we all saw during the pandemic, but let's put this in historical context. For decades, rates between 5 and 7 were considered normal, even good. What we experienced in 2020, 2021 was abnormal, not what we're seeing today. The retreat from 7 to 6.1 has had a real impact on purchasing power. For a buyer purchasing a Branford median priced home at $427,000, that difference translates to about $200 to $250 a month in savings compared to the 7% rate. That's meaningful, and it brings borderline applications back into the qualification range from a debt to income perspective. Branford also benefits from what we call the New Haven Premium. Our proximity to Yale University, Yale New Haven Health, and the biotech corridor means we have a steady stream of well-employed, qualified buyers who are less sensitive to minor rate fluctuations. These are professionals who view real estate as a long-term hold and an inflation hedge, and they're driving a lot of the absorption that the $450,000 to $650,000 range. So how fast is the market moving? Well, this is where we see the clearest evidence that the frenzy is pretty much over for right now. The median days on market for a single-family home is right around 55 days. That's up 9 days from last year. The average is even higher at 90 days. For condos, it's 44 days, which is actually 11 days faster than last year, showing how competitive that segment still is. What does 55 days mean in practical terms? It means we're back to normalized sales cycle. Week 1 and 2, you're preparing the property and launching your marketing. Week 3 to 5, you're doing active showings, buyer discovery. Week 6 through 8, you're in negotiations, inspection, contract execution. For sellers, this means you need to be patient. It's required. A home sitting on the market for 30 days is no longer stigmatized by the day it was like it was in 2022. It's just part of the normal process. Don't panic. Don't go crazy. Drop your price prematurely or anything like that. For buyers, this is great news. The frantic urgency to waive inspections, make decisions in 24 hours, it has dissipated. Although in condos, we're finding that is still something that people are doing with the multiple offer situation. They are waiving inspections. However, that is not suggested whatsoever. You should, even though it is a condo, you still should be doing your inspections. And I just had to throw that in there. But for now, the pace is a little slower. Fall through rates and more stable closings. There was a lot of fall through rates in December, the month of December, which hopefully that will have calmed down. There's a lot more buyers out now. So one exception, the luxury market. High-end properties face even longer marketing periods. A property in Pine Orchard Road that sold for over $2 million took 119 days to sell and closed 3% under asking price. Even at the ultra-luxury market, liquidity is not infinite. The buyer pool is thin. Those buyers are discerning. So what does all of this mean? Let's break down for each individual what a market like this looks like for you so you can make the best plan. So for buyers, the purification of the market is your opportunity. If you're willing to take on the project, target those homes that have been sitting on the market for 60, 90 days or more. This is where you'll find negotiating leverage and the ability to build sweat equity. You can often get a 5 to 10% discounts plus closing cost credits or rate buy downs that don't show up on the normal sale price. For turnkey homes in that $450 to $650 range, be prepared to act decisively. These properties still move quickly, but don't waive your inspection. The market has slowed down enough that you can protect yourself even in a market like this. In the condo market, be ready for competition. If you find a modern 2-bedroom townhome in that $300 to $400 range, move fast and run the rent versus own math. It can almost always make sense to buy if you can qualify. So that takes care of for the buyers. Here's the sellers. Sellers, I cannot stress this enough. Preparation is everything. The market is rewarding turnkey homes and punishing projects. Invest in a pre-sale prep, paint, update, stage, position your home on the right side of the bifurcation. And price your home at its current market value, not where you hope to be. The 99.6% sale to list ratio shows the market rewards accurate pricing. Homes priced correctly are still selling at or very near asking. But if you overprice, you're going to sit. And then you're going to have to drop your price. And that's when you lose negotiation power. Expect 30 to 60 days on market as the new normal. It's just how it is. And if you're thinking about listing, do it in March or April to capture that spring wave of a buyer demand before the inventory fully normalizes. Investors, Branford is still a great place, but investing has softened price per square foot in areas like Branford Center. Down 5.5% year over year is creating a value add opportunities. If you're a cash buyer who can bypass the 6.1 financing and absorb the renovation risk, you can acquire assets at a 10 to 15% discount related to the turnkey property. With the median rents at $2,400, the demand for high-quality rental units is still strong. Okay, so let's wrap this up with our 3 takeaways for the Branford market in January 2026. And I appreciate you all hanging in there. I know sometimes these get a little bit long, but I want to make sure I get you the right information and the correct information so you can make a good decision. So first, the pandemic, it's over. And we're in a state of rational equilibrium. The frenzy is done. The 55-day market time, price reductions, overpriced listings, and the return of due diligence are all signs of a healthy, functioning market. This is not weakness. This is normalization. Second, condition is king. The market is clearly bifurcated between turnkey homes that sell fast and for a premium, and project homes that sit and require discounts. For sellers, preparation is your best investment. For buyers, the bifurcation creates opportunity if you're willing to take on work. And third, the condo market is a battleground with only 2.5 months of supply, a median price of $299, and that powerful rent versus, own arbitrage. The sub 350 condo market remains the most competitive segment in Branford right now. If you're a first-time home buyer or you're looking for an entry point, this is where you need to focus, but you need to be ready to move fast. Looking ahead, success in 2026 market will be defined by precision over passion. Precision in pricing, precision in preparation, and precision in positioning. It's a more complex market than we've seen in recent years, but it's one that offers real opportunities for savvy buyers, sellers, and investors who understand the data. Thank you very much for watching. We'll see you next month when we do February's, and I look forward to bringing you more helpful information so you can make the best choices possible. Till the next one.